Welcome back to NYSE TV Live, everyone, and good morning. I'm Kristen Schiller. Great to see you as always. With Thanksgiving week underway, investors had plenty to be thankful for on Monday as the Dow surged by over 400 points to notch a record close. On top of that, the S&P 500 and the small cap Russell 2000 also hit new records after President-elect Donald Trump's decision to nominate hedge fund manager Scott Bessent for Treasury Secretary. Well, as for today, investors will have plenty to chew on, including fresh economic data in the housing and consumer sentiment spaces. And don't think we forgot about the Fed. This afternoon, the latest central bank minutes here in the U.S. will be released, giving investors new clues about what direction the Fed will choose when it comes to interest rates in December. Let's take a look at what's on tap in our show today. Well, as I mentioned a moment ago, the Dow, the S&P, and the Russell 2000 all hitting new record highs on Monday. And a markets expert will join me to talk about what we could see the rest of the week. Well, a record number of Americans are expected to take flight this Thanksgiving, and the chief economist of Hopper will join us to discuss how much or how little disruption the data suggests travelers will experience. And we'll speak with Carter Reum, the co-founder of the early-stage VC firm N13, about what he has seen from startups as we prepare to turn the calendar to 2025. Well, Wall Street will also be reacting to new quarterly earnings out this morning from the retail sector. They include a slew of NYSE-listed companies. Abercrombie said it expects a strong holiday quarter as growth continues, and that stock is up fractionally pre-market. Dick's Sporting Goods, meanwhile, did join Abercrombie in its holiday cheer, with those shares up nearly 10% as we come on the air. Sales at Burlington Stores, meanwhile, surged, with its outlook showing that its offerings are resonating with consumers into year-end. And as shoppers do show a willingness to spend on clothes, some data suggests that they are putting less focus this time of year on electronic gadgets. Well, with so much action already, Jeffrey Roach, the chief economist at LPL Financial, is joining me now to break it all down, of course, what it means for us and investors. Jeffrey, it's great to have you on the show this morning. And what do you make of the current state of the economy?
Well, good morning. There's certainly a lot of mixed data, but overall, the sentiment is fairly positive. That's certainly good news for retailers as consumers enter the holiday sales. But it's a little bit confusing, right? There's a little bit of an uptick from the recent continuing claims numbers, and of course the distortions from the latest non-farm payroll report. But outside of that, consumer spending is holding up. Businesses appear to be well poised to enter 2025 with some pretty strong demand for capital expenditures. And of course, the Fed managing through data revisions amid their data dependency mantra.
So we see a bit of a mixed market this morning, Jeffrey. We are awaiting the market open here at the stock exchange, but the S&P, the NASDAQ looking to extend the gains from yesterday. Both of those indexes up fractionally this morning. It does come after tariff pledges from President-elect Donald Trump last night. How should we be thinking about the tariffs that the President-elect shared with us yesterday?
Well, I think it's one of those things, we're used to the phrase speak softly and carry a big stick. The president-elect does not do the speak softly component. But I think markets are starting to interpret his rhetoric in light of that it's rhetoric. It's conversation starters with negotiating with our trade partners. I think the folks that are coming into the new administration, particularly the one poised there for the Treasury Secretary, I think is adding a little bit of voice to reason. And the idea that, yes, tariffs are a tax. At the end of the day, taxes always create some kind of deadweight loss between buyers and sellers. But I don't think that businesses should respond to all the rhetoric, and it probably will be similar to what we saw in 2018. And it's really important for investors to remember 2018 tariffs certainly impacted producer prices, but actually we saw CPI, consumer prices, actually fall throughout 2018 and into 2019.
I do want to talk about the state of the consumer, Jeffrey, because we've seen some positive earnings results, notably from NYSE listed companies, Abercrombie, Dick's Sporting Goods, just to name a few this morning. Walmart, of course, last week as well. The consumer seems to be pretty strong heading into the holidays. Is that how you see it?
Well, certainly the middle income and upper income consumers are doing fine. And I like to remind folks, it's very different experience if you refinanced your house in 2021 and holding a very low rate on your mortgage. That's a very different experience than if you're a renter. So as we go into the holiday sales season, I expect the consumer spending component to be supported by certainly those middle and upper income households.
Mm-hmm. And in terms of how Americans should be budgeting for the year ahead, Jeffrey, what would you tell them as they turn to their own planning with 2025 approaching?
Well, overall, we do think rates will drop in 2025. Eventually we need to talk about the Fed. That's still the elephant in the room here. And I think we can expect across the board rates a little bit lower. Probably not as low as we thought maybe 2 months ago, but certainly 2025 will be a year where rates are going to be lower by the end of the year than where rates are as we start the year.
What do you think this means for stocks, Jeff?
Well, valuations are still pretty rich. And so, a lot of this is driven by the artificial intelligence craze. I think we still have a little bit more room to run in general as we think about we're in the early innings of the artificial intelligence game. Perhaps specific names might not continue running as richly as they were in the last year. But I think you add a little more demand from CapEx. As I mentioned earlier, businesses seem to be well poised to start spending for capital expenditures in 2025. That's certainly going to support the markets next year.
I want to ask you about inflation as well, because we will get a read on inflation this week. The Fed's preferred inflation gauge, that is the PCE index, of course, as we digest what President-elect Donald Trump has said specifically about tariffs and some of the action that we've heard from companies. What is your expectation for inflation?
Well, I think we'll get a little bit of a head fake this week when we get the data. So, the Fed focuses on 12-month or annual changes in inflation. And you remember from October last year, we had some pretty big declines in energy. So I think because of base effects, we might have a little bit of an uptick on the annual rate. I don't think that'll change the overall trend, though. The trend of inflation is downward. I think the Fed is actually spot on saying the risks are fairly balanced, but they do need to be very, very careful on the labor side of things. But at this point, yes, we'll have a little bit of choppiness in the read here, but we know that housing inflation will eventually ease up a little bit more as we enter into 2025. And then we're starting to see a little bit of an ease up in professional services, financial services, and insurance. We're starting to see a little bit of that easing up as well.
Jeffrey Roach, Chief Economist at LPL Financial. Jeffrey, thank you. He'll rejoin us after the stock market opens virtually. Well, up next, Americans are packing their bags and getting ready to travel for the Thanksgiving holiday. Find out what we should expect this week and all throughout this holiday season when we come back.
So, John, tell us a bit about the partnership you have with Santander and Openbank.
It's a Spanish man and it's a Spanish company. This is my only Spanish partnership. Santander has a long history with the game of golf and being a professional golfer. It's a true honor to be a part of it. And then, well, we're here at the New York Stock Exchange for the opening, the soft launch of a new online bank here in the U.S. being Openbank.
Now, John, when deciding which brands you partner with, What factors do you consider?
I try to get brands that represent me in some kind of way, right? And trying to at least having the opportunity to partner with somebody from Spain, a family that grew up in northern Spain like myself, not the same city, but close enough, that has a close history with the game of golf. I thought it was a no-brainer, right? They've also been involved in other sports like Formula One and many others. I think that was an easy choice, right? But I think every brand I've had, I try to see what their expertise is, what their motto is, and what they portray to the world, right? And that's what I try to link myself with. So my image in itself, or what is the name John, is either uplifted by those brands or related to those brands, right? And I try to be picky. Luckily, I've been able to have some great partners to join with and keep on going on those ventures.
Now, Santander is growing in the U.S. market, which is a journey you yourself are familiar with. Do you see any parallels between your own experience in the U.S. and what Santander is doing today?
There is a difference when you're playing in different parts of the world. The golf courses are different, the setting is different, right? So to be as complete a player as you can be, you have to play in all different environments. And coming to the U.S. is a massive one, right? 3 of the 4 big majors are played in the U.S. All the big events are played in the U.S. So being able to come here.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schiller here in studio. Well, as Americans prepare to travel for Thanksgiving weekend, new data suggests that we could see a record number of people on the move. So for more on what we can expect this holiday season, I want to bring in my colleague Trinity Chavez with more. Trinity, good morning.
Good morning, Kristen. That's right. The Transportation Security Administration, better known as the TSA, is prepared for the busiest Thanksgiving travel period on record. The agency expects to screen 18.3 million people beginning today through next Monday, which would be a 6% increase compared to that same time period last year. For more on what we can expect when it comes to air travel this holiday season, I want to bring in Haley Berg. She is the lead economist at Hopper. Good morning, Haley.
Good morning.
It's great to have you on the show. Now, you just heard those numbers, how the TSA projects more than 18 million people will travel this Thanksgiving. So how does this compare to past years, and what challenges do you foresee for both travelers and the travel industry in managing the surge?
We're certainly expecting a busy holiday season. From a capacity perspective, airlines have scheduled nearly 5% more seats this Thanksgiving week than they did Thanksgiving week last year. And it all comes back to how much demand there is for those trips home for the holidays or vacations over Thanksgiving. The good news is that there's been tremendous improvement in airport management, airline capacity. So outside of any very unexpected weather, we are expecting a smooth Thanksgiving travel week.
But you know, this morning, the FAA is warning travelers of a shortage of air traffic controllers, not to mention the highly anticipated weather disruptions, as you mentioned. So how should travelers prepare for this sort of impact of the disruptions on their travel plans?
Planning ahead is key. You know, it doesn't matter how much preparation airports, airlines, and the like do if there's bad weather or sometimes just domino effect disruptions. So for travelers, that means downloading your airline's app, signing up for notifications so that if there are changes to your specific flight, you're getting real-time information. And always remembering that there might be just one customer service agent in your airport terminal, but there could be hundreds on phone lines. So always multitask. If you are impacted by disruptions, get on the phone with customer service while you wait in line to see if you can speak to an agent in person.
And Haley, according to your data, last year, the Sunday following Thanksgiving had a flight disruption rate almost 4 times higher than that of Thanksgiving Day and more than 2 times higher than Black Friday. So what do you think we can anticipate this year?
The Sunday after Thanksgiving is one of the single busiest travel days of the year. It's the most popular date to fly home from the holidays. And it's a Sunday, so it's convenient for most travelers. We are expecting to see the highest volume of flights departing on Sunday. And like you say, we did see a higher disruption rate last year. The good news is airlines have planned ahead for this. They've spread out their schedules. So travelers who are flying home Sunday, make sure you get to the airport a little bit early. Expect longer lines as it is the busiest day. And again, just sign up for those notifications. You can't control whether you're disrupted, but if you plan ahead, you can make it a little bit easier to manage.
And what would you say are some of the busiest airports and most popular travel destinations? What trends or events are driving their popularity as well?
Atlanta, Denver, and Dallas are going to be the busiest airports. So if you're flying out of those, beware, lines are going to be extra long. And in terms of destination, it's a lot of domestic destinations at this time of the year. Think Los Angeles, Dallas, Atlanta. And for those who are headed to warm weather destinations, maybe a getaway, San Juan and Mexico City are very popular at this time of the year for those travelers who make it a 5-day weekend, leaving on Wednesday, coming back Sunday, taking advantage of whether it be time off work or school.
Tell us more about Travel Deal Tuesday and what other travel deals we can expect this year.
For travelers who maybe procrastinated booking their Christmas or New Year's travel, there's one more opportunity to get a good deal. It's Tuesday, December 3rd. Travel Deal Tuesday is the best day in that post-Thanksgiving shopping period to book travel, hotels, rental cars, flights. We're expecting to see a huge volume of deals. We've already heard from airline partners like American Airlines, Fiji Airways, British Airways, that they plan to participate. On the Hopper app, we're going to have up to 50% off hotels in destinations around the world, more than 10,000 properties. It will be a really good day to book travel. So whether you're thinking about end of year trips or already dreaming of 2025 getaways, it's the best day to book in that post-Thanksgiving period.
Haley, we have about 60 seconds left here, so I do want to ask you, do you typically see other travel deals on Black Friday, considering Thanksgiving is just less than 2 days away?
I always say if you see an exceptional deal on travel on Black Friday or Cyber Monday for that, definitely book it. There are great deals available on travel throughout the weekend after Thanksgiving, but we see double the number of deals and discounts on Travel Deal Tuesday as we do on Black Friday or Cyber Monday. So if you don't see anything on either of those days, hold out for Travel Deal Tuesday. You should expect to see some really great deals relevant for you.
I know when I'm booking my travel. Thank you again, Haley Berg, lead economist at Hopper. Now, while many Americans will be traveling through the air, even more will be hitting the road. Find out what you can expect when it comes to prices at the pump when we come back. Since we last talked, I know you have a major announcement. You just made the largest deal in the ASPM space. So talk to me.
Application Security Posture Management market, yes.
Yes. And I understand that it's with an NYSE listed company. We can't say the name.
Fortune 10.
Yes, Fortune 10 company. Tell me about this deal.
First and foremost, this is a deal that changes startups, okay? And we're super, super excited about it and why they decided to partner with us for 3 years. Very large deal was technology that we developed. We actually helped them automate all their security risk assessment questionnaires, build a real-time software inventory, and prioritize, remediate, and prevent risks before they get to the cloud.
Let's talk about how Apiro recently launched the risk detection at the design phase. Can you talk to me more about this and how earlier detection in the software development of these kind of problems will help enhance the security outcome for businesses?
Based on NIST, the cost of fixing a defect at runtime when it reaches to the cloud, 100x more than in the design phase. So what we did, we developed our own private LLM model that scans every feature requests that gets into the development lifecycle. And automatically, we generate threat modeling, stories, mitigations before one line of code is written.
I do want to talk to you about a new product that I know that you are going to be unveiling soon. Can you tell me more about it?
I can't share all the details, but I will say the following. We're using the Apiro deep code analysis technology to identify our software architecture. The next phase is to visualize your software architecture in a very, very interesting way. It's like a living and breathing organism. It changes every day. So you need to visualize it to help developers write.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. AAA is projecting that nearly 72 million people will be traveling by car this Thanksgiving. And according to the latest data, they could be seeing some relief at the pump. In fact, according to AAA, average regular gas prices across the country set at $3.06 a gallon on Monday. That's cheaper than the $3.14 from a month ago and the $3.26 that drivers would have seen last year. Patrick DeHaan, head of petroleum analysis at Gas Buddy, joins me now with more. Patrick, it's great to see you here on NYSE TV Live. And for our viewers watching, preparing to take to the roads, what do they need to know this holiday season?
Well, it's good to be with you. Well, the takeaway here is, well, it's not a bad time to hit the road. Gas prices have been falling. We're at our lowest point since 2021. The national average even could fall below the $3 gallon mark here in the next couple of weeks. Already 30 states across the country with prices below $3 a gallon. That's also amounts to about 100,000 gas stations across the country below $3 a gallon. So certainly if you're driving to grandma's house, a lot of Americans, according to our survey, traveling between 1 to 3 hours, about 30% of travelers traveling 1 to 3 hours, and another 30% traveling 3 to 6 hours. If you're hitting the road, just be wary of state lines. You'll see the map behind my shoulder. Gas prices still all over the map, but far more affordable this Thanksgiving than they've been in the last few years.
What is the best way, Patrick, to prepare for some of those longer 1 to 3 hour trips?
Well, a lot of it is simply just a little bit of planning. Of course, a lot of Americans use apps to make sure that they're going to avoid traffic and things like that. I would say as well, for the Americans looking at their gas tank, it's not full, make sure to give another 10 or 20 seconds of thought to where you're going to fill your tank. Is it going to be down the road? Is it going to be across the state line? Of course, an app like Gas Buddy will show you where those lower prices are, but just a little bit of work, 10 or 20 seconds, can generally save you 10 to 20 cents a gallon.
Are you seeing any fluctuation of gas prices, Patrick, across the country in different markets?
Oh, without a doubt. There's definitely two different directions right now. Some states, most states, are seeing gas prices gradually decline, but here in the run-up to Thanksgiving, we did yesterday see big increases throughout Great Lakes states where they exhibit what we call price cycling habits, where prices may shoot up 20 or 30 cents only to start feathering back down again. So absolutely, the Great Lakes now experiencing some of those higher prices that will start eventually going down, whereas other areas, especially the Deep South, gas prices are continuing to slowly decrease.
All right, so good tips for anyone preparing to hit the road this Thanksgiving holiday, Patrick. Do you expect that those prices could change heading into the end of the year?
Yeah, absolutely. There certainly could be some volatility as we get closer to Christmas and towards New Year's. We continue to watch geopolitical tensions, especially the Russian war in Ukraine. Escalations are happening as Ukraine has now gotten approval to use U.S. missiles, and Russia has launched an ICBM into Ukraine. So those escalations could push the price of oil up, as well as what's happening in the Middle East. Iran and Israel, seemingly maybe there could be a ceasefire involved between Israel and Hezbollah. That's something that could help push oil down a little bit as well. But certainly there will probably be some bumps in the road, maybe a little bit of increase, maybe a little bit of decrease between now and Christmas. There shouldn't be any huge moves. Gas prices still should remain at some of the lowest levels we've seen in the last few years.
Interesting, Patrick. So based on this data, based on the prices, do you think it might make more sense economically for Americans to turn to driving versus perhaps heading to the skies?
Well, it certainly gives Americans the ultimate freedom when it comes to those time schedules. Of course, airlines, you have to certainly be on time and punctual for when those schedules show aircraft leaving. Cars give a little bit more flexibility. You can leave it at your whim, and of course, the freedom of your own schedule. And with gas prices at their lowest levels in over 3 years, it's certainly not a bad recipe to enjoy that flexibility this holiday season. Of course, I'm sure there's going to be a lot of folks that are running behind schedule, and so that's where car and flexibility really comes in handy.
Patrick, we've been asking a lot of our guests here on NYSE TV Live what a new administration and a red sweep in Washington might mean for the economy and individual sectors going forward. What do you think it means for this space?
Well, there's a bit of uncertainty. I would say overall over the next few years, I would believe that the Trump administration is going to be a little bit more friendly, that is a little bit more towards deregulation on the oil sector. Although last night, President-elect Trump tweeted out the potential of tariffs on countries like Mexico and Canada. And of course, we do a lot of oil trade with Canada. And so that could be a little bit more on the problematic side of things. Now, I think it's just a negotiation tactic, but the real question is open, that we just don't know if President Trump will initiate any tariffs on that Canadian oil moving forward. So ultimately, I think it's going to be less regulation for oil industries moving forward, and it potential will bring more oil production online, but there could be some pinch points as well, talking about tariffs.
Interesting. So, of course, we will be following the tariff conversation very closely. Patrick DeHaan, he's head of petroleum analysis at Gas Buddy. Patrick, thank you so much.
Thanks for having me.
All right, everyone. Well, don't go anywhere, because up next we'll have the opening bell after this short break.
Brett, we're here at the New York Stock Exchange. You're here with the Startup Challenge by Snowflake.
Yes.
So tell me, what were your key takeaways from this competition, and how do you see these insights influencing Big Geo's journey forward?
It was incredible being down there for the Snowflake Startup Competition. It was really encouraging to see where they're going with their ecosystem, and what they're doing with native apps specifically is where we're kind of going to market with them. And the support network for me was the biggest takeaway. It was once we met with them and we were like, we're going to work together, it was just everybody piled in, and we got the job done. So I was very encouraged, and I know Brent can speak for that as well. It was knowing that we picked the right ecosystem to go to market with. Snowflake was that for us.
Now, Brent, the data center and cloud landscape is evolving rapidly. How does Big Geo's technology align with the future of data centers? And what role do you envision for your company in this transformation?
It's an incredible technology for the data center space. I mean, we're having these conversations on a daily basis with some of the world's largest hyperscalers. Our technology sits right up against, it's built on first principles solutions from the ground up to increase performance at the data center. So we're looking at this technology as a way to reduce the amount of electricity consumption for data centers when it comes to geospatial performance, which is vastly becoming or quickly becoming one of the largest computing workloads at the data centers. So it's a very important technology to align with our hyperscaler partners and give them more, save them on electricity so they can spend that on artificial intelligence. So,
all right, now, Brett, we're here at the New York Stock Exchange.
It's
You're
awesome.
on the trading floor.
It's awesome. I've seen all the movies.
Well, tell me, how does it feel to be here? And how does this experience align with Big Geo's goals and vision?
Well, first of all, it's great.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. And in just a moment, the NYSE Client Relationship Services team will ring the opening bell in celebration of their dedication to outstanding client support and commitment to the New York Stock Exchange. To honor the occasion, Caroline Cox, Senior Manager of CRS, will do the honors. All right, well, as we await the opening bell, stocks are coming off of a very strong session. The Dow, the S&P, even the Russell 2000 hitting new records. On Monday, I want to bring back Trinity Chavez to chat with me before the bell. Trinity, I think a lot of traders and Americans alike, many of our viewers, preparing for the Thanksgiving travel. I enjoyed your interview with Hopper earlier.
Yeah, no, I mean, everybody is preparing for travel. I know I am this holiday weekend, as I'm anticipated to go see my family on the West Coast. But, you know, this is going to be a record-breaking season, as we are getting reports that the TSA, again, is projecting over 18.3 million people are going to be traveling, going through those turnstops at the airport. And, you know, around 3 million people are predicted to hit the air, actually, you know, the Sunday after Thanksgiving, as well as those record numbers that you were talking about with everybody hitting the road and those surging gas prices.
And Trinity, we do see stocks set for a higher open for the S&P. The Dow Jones Industrial Average underperforming just a hair, fractionally lower this morning. But some of these NYSE-listed companies, speaking of the holidays in the retail space, Abercrombie, Dick's Sporting Goods, Burlington Stores this morning, certainly showing that their strategies are resonating with shoppers heading into the holidays, expressing some holiday cheer. How's your holiday wish list looking?
I need to work on it, to be honest with you. I haven't even thought about gifts for myself, but that's a good thing, right? It's all about the gift of giving during the holiday season. What about you, Kristen?
I think you're exactly right. Of course, we can't forget about what the holidays are all about, and that is being with family and friends, loved ones, and supporting those around us. Let's listen in to the opening bell. All right, we are officially open for trade. That was the opening bell here at the Stock Exchange. I want to bring back in Jeffrey Roach, Chief Economist at LPL Financial. Jeffrey, it's good to see you, and we see stocks across the board pretty much higher. The Dow underperforming a little bit, but those small caps certainly adding to a new record yesterday, up 1.5% on the Russell 2000 at the open. We've been talking about the retail space, the travel space, what we can expect these holidays, and I'm curious to hear from you too, given the data endpoints, how you think this might impact Fed policy ahead.
Well, the strength of the economy, both in the corporate sector as well as the consumer space, is giving a little bit of heartburn for the Fed. I think they got over their skis a little bit with a very aggressive 50 basis point cut to start this cutting cycle back in September. I think we're probably going to see a cut either December or January, and then we'll see a few meetings where they pause, just wait and see. I think at this point they'll probably revise their forecasts. As investors know, they release the summary of economic projections periodically throughout the years. We're going to get an update in the December meeting, and I think they're most likely going to revise up their growth forecasts, perhaps revise up their inflation forecasts, and we're going to have to see how they respond. We'll get a little bit of insights when we get the minutes in just a little bit from their most recent meeting. But they're in a tough spot right now because inflation has not eased and the economy has not cooled as fast as they expected, perhaps even just a few months ago.
We'll be watching those minutes closely. Of course, we'll cover them on tomorrow's show at 9 a.m. Eastern. And in terms of the small caps, Jeffrey, again, that Russell 2000 index hitting its first all-time high since 2021, pre-inflation yesterday. Those stocks extending their gains. Last I checked, up 1.5% on the Russell 2000 at the open. What kind of environment is now set up for some of these smaller companies that we had seen underperform during the first 2 years of this bull market?
Right. I think the small cap space is trying to figure out how much of the strength in the economy will continue for 2025. I think the fact that we've had some upward surprises in the economic data has certainly supported small caps. As you know, small caps are very sensitive to growth metrics, and if growth is surprising to the upside, that's certainly a good thing for small caps.
I'm Jeffrey Roach, Chief Economist at LPL Financial. Jeffrey, great to see you, and thanks so much for your insight.
Thank you.
All right, well, stay with us because up next, we're going to be talking about venture capital with Carter Reum. He is a co-founder of M13, a VC. We'll take a closer look at that space at large. Stay with us.
What you need is the commitment of all the employees that it's a priority, that we value culture, that it's a differentiator, that it helps us better support our partners and our customers. And I think all 20,000 people truly believe that. And so we're focused on it. But you have to be willing to change too.
Yeah.
And that's always one of the challenging parts. When you think you have a great culture, it's easy to say, okay, let's just not break it.
Yeah.
But if you just say that, you say, let's just not break it, okay, then you're not evolving, right? And the world around us is changing every day. And you have to respond and react to that. And that means you have to do that for the business and respond to those external dynamics, but it means you have to do it for the culture as well.
Yeah.
We've been through a very difficult few years as a country, and that means that you need to support your employees differently given those circumstances. But I'll tell you, it's really important to listen to that cohort, because their needs and the pressure that they're under is very different.
Yeah.
And that's where I think, we add a lot of value. And we add a lot of value to those partners, even outside of the credit program. Like, we can actually help them on other topics, HR, finance, other things that we do where we have a more established process will help our partners. And we do that just in the spirit of partnership. But it means a lot to that group, because they do have a totally different set of demands. And one of the things we did in the reorganization is we realized that a lot of what they need and a lot of what we needed to do to support our partners was common across industries. The customer experience has never been more important than it is right now. There is very little friction.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schiller here in studio. M13, a top-ranked venture capital firm, has its sights set on tech investments harnessing artificial intelligence and Web3. With more than $1 billion in assets under management, it has backed household companies that you know well. Think Pinterest, Shake Shack, and Daily Harvest. Well, joining me now with more on consumer tech and media and the investing landscape is Carter Reum. He's the co-founder of M13. Carter, it's great to have you on the show this morning, and I want to hear from you how this investing landscape looks.
Yeah, I think it's an exciting time right now. Obviously, there's a lot going on, with AI. You have kind of the crypto markets kind of back, and so I think it's a great time to be investing.
Great time to be investing, as you mentioned there. I'm curious, what are some companies that look attractive to you?
Yeah, I think you're seeing a lot of disruption right now. In the world of AI, what we're thinking about right now is everyone's talking about the actual technology. I think what we think about a lot is kind of what are the implications of that technology. We have companies like Prepared in our portfolio, which are using technology and AI to disrupt 911 call centers and make the world a safer place. Or companies like Carenostics using AI to do earlier disease detection in healthcare. And so we think of AI as a horizontal layer that cuts across, the future of work, the future of health, commerce, money, really will be disruptive across everything we do.
Yeah, we've seen artificial intelligence absolutely drive the narrative, certainly down here on the floor of the stock exchange the past 2 years or so. And I know your firm has invested in 14 early stage companies that did go on to achieve that coveted unicorn status with a valuation of $1 billion or more. What's your playbook for building a successful startup these days?
Yeah, I think, when we're thinking about kind of early stage investing, we're looking for visionary founders. They have to go out and recruit world-class teams. And then it's all about just execution. And so, we've been lucky enough to back so many great companies like Ring that are synonymous in the world these days. And so we just try to think about where the world's going and how do we be a part of that.
And within the media space, where do you see the puck moving, knowing that media is a focus for your firm?
Yeah, I think, we had a big thesis many years ago about the creator economy. There's 50 million people that now identify as creators. Even when you see the earnings this week, you see somebody like Walmart doing an exceptional job in raising guidance. I think they've understood retail entertainment and the power of creators. They've used leverage creators like Paris or Mr. Beast. And so, we have companies like Pietra in our portfolio that are kind of powering that economy. So I think you're going to continue to see that.
Yeah, I want to hear more about what makes the ecosystem around Paris and Mr. Beast so successful in your view.
Yeah, I think what a retailer like Walmart has figured out is that there's a lot you can buy online now, and so if you're going to get somebody to come into the store, you really got to focus on retail entertainment. You really got to focus on products or experiences that they can't get sitting at home. And I think Walmart has been one of the first and most powerful, realizing the power of those creators to drive consumers into store shelves. And I think Mr. Beast and people like Paris Hilton have done a great job of doing that.
Certainly Walmart's earnings last week, an NYSE listed company, we should note, as showing very strong consumer engagement outside of that grocery aisle. And of course, investors responding accordingly in the wake of that. So I want to hear more from you in terms of how these companies can navigate the current market, Carter. What would you say?
Yeah, I think one of the things that we think about a lot in the world of AI, since it's top of mind, is that, in past disruptions, when you think about all the great companies we have that are the result or the implication of the iPhone, it was really innovators competing, right? You had Lyft and Uber, you had a bunch of innovative new social media networks. I think what's different about the AI of it all is innovators are competing with kind of the big companies, right? The big companies have a lot of data sets and things like that. And so I don't know if anyone knows where the world's going. I think the one thing that I think is true is that AI will fundamentally kind of change so much we do, but you're going to have Google and Meta and these big companies competing with innovators, and so I think it's going to be a super interesting time.
We've been covering throughout the show how small caps are just having a great stretch these past 2 days, hitting a record high on the Russell 2000 for the first time since 2021. Since, of course, the start of this bull market, do you think that smaller companies like startups that you work with are now well positioned in this environment?
Yeah, absolutely. I think, one of the things that the small caps or kind of small companies have the advantage of is just the ability to be nimble and the ability to innovate faster. And so I think you're going to see a lot of that. There's going to be names that people don't know today that are going to be ringing your bell in the future. And so I think you'll continue to see that. Having said that, the big companies have a lot of advantages right now. Again, they do have tons of technologists, lots of data. And so, you never know what the future is going to bring.
Carter Reum, M13 co-founder and partner. Carter, thank you so much for joining. We appreciate it.
Thanks so much. Super appreciate it. Thank you.
All right, well, staying in the consumer tech space, NYSE-listed commerce platform VTEX is looking to deliver more efficiency and less maintenance to organizations seeking to make smarter IT investments. Our Judy Shaw spoke with the company's co-CEO. Take a look.
It's wonderful to have you back on Floor Talk. Thanks for joining me today.
3 years.
3 years.
3 years.
It's been wonderful.
Yeah.
So now, VTEX has been outperforming many of its competitors. What factors do you think are driving its success?
So I believe the focus on providing the software for commerce, for enterprise customers in a layer of commerce experts service providing. So we not only serve the best product, but we have the best ecosystem to provide those enterprise customers to simplify their operations. Customers are fed of paying abusive prices. They need, because of the financial distress that the world is a little bit, they need to pursue profitability. And VTEX product fit, it is natural for that. Remember that we came out of Brazil, in a country that we learned how to provide very kind of a complete software in a very, very affordable prices. And that's what the American companies are now looking for it. And the product fit of VTEX to the American retailers and brands are natural. You mentioned that we are outperforming. I believe we are doing a good job. Our competitors are doing a good job as well. But yes, VTEX is popping, and I'm really proud of what they're doing.
So let's talk about trends. What trends do you see for retailers and brand manufacturers in digital commerce?
We cannot ignore the fact that retailers and brands manufacturers, they were suffering in the last 2 years with the high financing costs. And that affects their margins. So if you go for the listed companies, average could be around 4 to 5% profitability. That's too low for a sustainable market. So the years that we have been through The retailers, they started to be a little bit more fat than the necessary. So they need to be cutting and the fat and being lean to operate in a more efficient way. The trend now is to pursue the simplicity on the architecture. So not about complex things, it's the opposite. Now the simplicity rules, and they are pursuing companies that can provide them out of the box just things that they need to be there. So I'm talking about the omni-channel, the cross-border, the multi-warehouse operation, a platform with order management in the same platform. So all of these before was a kind of a puzzle. It was too expensive. Now you can just hire one provider and you have these out of the box. So this is a trend. The companies will, for the next maybe 3-5 years, keep pursuing efficiency at ultimate all costs. And we are happy to provide the software that does that and allow them to have this kind of efficiency. This is the biggest trend. A second one, if I can mention, is the fact that new channels needs to pop. The cost of acquisition for all retailers and brand manufacturers are in the peak. The inflation on clicks to have cost of acquisition online, it's in a 15 to 18% year over year, reaching a moment that nobody wants to pay anymore for online traffic. So what's next? I believe that conversational, new channels, organic and sustainable channels like live shopping, personal shopper, I believe will pop to the Americans as it already popped in Europe, in Asia, in Latin America, and it's starting to enter in the US. So unstructured channels on an organic and sustainable way will be where the retailers will be focusing, and customer service will be a key trend. So the marketing is not anymore to acquire customers. The marketing is how you create loyalty into the customers that you bought. So the marketing departments also will be reinvented, recreated. And with the advent of AI, then is another thing, right?
And how do you think AI will impact retail globally?
Enormously. The companies that do not use AI in their favor, they're going to be out. Simple and pragmatically. There is a trap that we need to point it out. AI is an infrastructure game as cloud. So if we came back in time 20 years and we ask the retailer, say, how much are you going to invest in cloud? Probably the smartest answer would be no, nothing. Because companies like Google, like Microsoft, like Amazon, AWS is already spending billions on cloud, and I'm going to use it in my favor. So new disruptions on infrastructure are used to reduce the cost of operation, not to increase CapEx. So it is a trap that if it is not well communicated, retailers and brands will fall for that and will start spending CapEx again and again, and the financial distress will get worse.
All right, thanks to Judy Shaw for that interview. We will explore some of the latest trends surrounding the holiday shopping season after this short break.
Following a cuisine, we're actually So we're not following a cuisine, we're actually really leverage the culinary art form of churrasco, which is very traditional Southern Brazilian cuisine. We've been doing it for 45 years. So you're right, we only have 72 restaurants in America, but 96 globally. But our whole essence of our brand is about scaling the authentic culinary art form that we know our guests love around the world.
When it comes to cuisine, there's many different trends out there, right? Especially as people are more health conscious these days. So how are you keeping up with these trends, but still being true to your brand?
What we love about it is everything we serve is nutrient dense and good for you. So it's up to you and your diet and how you like to dine, but we've done that for 45 years. What's exciting is our innovation around that is even getting better. We just rolled out whole brand Zeno seafood, so we're just now beginning the fresh seafood platform, and we're really excited about that.
Ooh, that sounds delicious.
Yeah,
we're gonna have to try it when you open up your new restaurant.
That's
just
right.
What, a block or two away?
That's right.
Yeah, talk to me about when that's going to be opening.
So we're opening by probably like middle of December, but it's World Trade Center. Really excited. So it's our second one in Manhattan. We have one in Midtown. It's 18,000 square foot. The one in the World Trade Center is ground level. It will be about 5,000 square foot, so really excited to open that. Can't wait to host you there.
Now, you've experienced significant growth in recent years. We talked about over 90 restaurants worldwide, over 70 here in the United States. What would you attribute your success to, and how do you think you're going to continue this momentum?
We scale our culture first by really investing in our people. A lot of training, because this is an art form that is unique to us. We're the category leader in it, and we are scaling it globally. So when you think about how to do it well, to keep the authenticity, we focus on our human capital pipeline first. Now we have visibility of 3 years of sites ahead of us because we have 3 years of people, I would say talent ready to do it.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here at the Stock Exchange, and let's take a look at how stocks are faring. The S&P, the Russell 2000, they are on the rise today. That Russell 2000 hitting a record yesterday for the first time since 2021. The S&P extending its gains today, and that's on the back of still positive momentum following the post-election period. We had seen stocks take a breather. They're rising again. Of course, Trump did promise tariffs late yesterday, but for now, investors shrugging that off, waiting to see how that actually plays out following his Treasury Secretary pick earlier, and that was received well by markets. Earlier in today's show, we touched on retail as more companies reported their latest results. Many positive results and outlooks there. I now want to bring in Trinity Chavez for more on the latest holiday trends for consumers. Hi, Trinity.
Hey, Kristen. So with the holiday season just around the corner, consumers are already gearing up for shopping sprees, gift giving, and big savings. But what trends are shaping the way people shop this year? Joining us now to break it down and the latest insights into consumer behavior and holiday spending is Stephanie Carls. She is retail insights expert at Retail Me Not. Stephanie, good morning. It's great to have you.
Good morning. Thanks for having me.
So let's talk about how consumers are approaching this holiday shopping season this year compared to previous years. Are you seeing any shifts in the balance between in-store and online shopping?
So we are seeing that shoppers are spending more. It's actually up 14% compared to last year, but they are being smarter in how they're shopping. So they're looking at cashback offers and the early deals, and of course the sales going on to help manage their budget. And we're still seeing that around 62% of shoppers are planning to be in store to shop as well as online.
Now, with concerns about inflation still lingering out there, how are consumers adjusting their holiday budgets? Are they prioritizing specific categories like travel or electronics or experiences even?
They are, but I think one of the biggest reasons that individuals are taking a look, I think even closer at these different sales that are happening is because they are realizing that the sales are happening, they're early, and that gives an opportunity for people to stretch their holiday budget. And then with them being more savvy and realizing all of these different offers, it's going to really help them stretch out their budget even further. And so no matter what category you are spending in, you are able to then look at what are the different ways that I can get the most for my money. And that includes stacking those different savings. And I think more people are paying attention to those opportunities.
And speaking of getting the most bang for your buck, so to speak, Black Friday and Cyber Monday have traditionally dominated holiday shopping. Are these still the most significant days for deals, or are there newer trends like early holiday sales or extended discounts that are reshaping consumer habits?
Black Friday and Cyber Monday, just the entire cyber weekend, even including Travel Tuesday, these are going to be one of the best times to really get some of these great deals. And so that's where people are really trying to find those options for the different items that they're looking for. And so if you wanted to look at what people should be buying on those days, you have Black Friday that is best for those big ticket items. So TVs, laptops, gaming consoles, kitchen appliances, and of course toys, beauty gift sets, and clothing. And then Cyber Monday, that's where you want to focus on those tech accessories, travel deals, streaming services. Digital gifts is then where you want to concentrate then for Cyber Monday.
Now, I know you talked about specific days on which you can shop specific products, but are there specific products overall that you see are more popular than others this year?
Really, there are the very popular categories that we've seen in previous years. So, of course, you're going to have those electronics, of course, with TVs and laptops, gaming consoles, but then really going down into travel too. I think a lot of opportunities are there with some good savings, and even Retail Me Not is doing a cyber weekend as well. And so they're featuring up to 20% cash back on top of all of these different sales. And so even for travel, you're looking at 20% cash back at booking.com, 14% back at Viator, 8% cash back at hotels.com. So more people are also realizing that it's not just about these items that we're going to put underneath the tree. It's also about gifting those different experiences, whether that's to yourself or to others.
And how would you say retailers are adapting to meet evolving consumer expectations this year?
You're going to see a lot of price matching. You have price matching wars that are going on, and this is also great for consumers. But the retailers are noticing that we need to make sure that we want to keep that business. And so as people are going in and looking at these different gifts that they are buying, you don't really have to worry about, well, what if I get it too early and then it's going to go down in price. You have retailers like Amazon, Target, Best Buy. They are staying on top of not only what each other are doing, but they're making sure that they're making this easy for the consumers as well.
Well, thank you again for joining us, Stephanie. That was Stephanie Carl. She is of Retail Me Not. Now I want to bring my colleague Kristen Scholler back in as we near the end of the show. Kristen, I mean, we have to get our wish list together. We're all this retail coverage we've been doing on NYSE TV Live and all the deals and steals that we're seeing that are hitting the market.
You're exactly right, Trinity. And look, it does appear to be working for these NYSE listed retailers that we've been covering really the past week. Earlier this morning, it was Dick's Sporting Goods, it was Burlington Stores, among other companies like Abercrombie, and last week Walmart. So obviously shoppers are in the mood to spend. That should bode well for holiday sales this year and of course for overall GDP growth. Anything on your wish list, Trinity? I've been trying to get a little bit of a sense as to what you might want for the holidays this year.
I have to say, after these conversations that we've had today, I think I'm leaning more toward of an experience rather than just a product or a piece of technology. You know, especially we're hearing about all of these travel deals with the deals on Tuesday, the travel deals and steals that we're hearing about. So I think that I might put that on my wish list, Kristen. I mean, it's all about being with the ones that you love during the holiday season, friends, family, creating those memories, because those are truly priceless.
I think you're exactly right, and probably many people on that boat as well, in addition to the retail sales that we've been seeing, but an experience is always something to celebrate and enjoy. And as we look to round out this show, we do see stocks on the rise today, extending those record highs from yesterday. The S&P, the Russell 2000 gaining ground. Some of these retail results, as we covered earlier, certainly from a company like Dick's Sporting Goods, boding well in the market early on Tuesday. We'll continue that coverage. For Trinity Chavez and myself, Kristen Scholler, here at the Stock Exchange, thank you for watching. We'll see you back here 9 a.m. Eastern Time tomorrow. Have a great day.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.